Hello, should I trade dividend paying stocks? Should I swing trade dividend paying stocks? Well, you can. The thing is, when you are creating your watch list, you don't need to focus on whether it pays dividend or not. Some of them might pay dividend, some of them may not. You don't want to select specifically dividend stocks to swing trade because naturally dividend stocks uh, tend to pay high dividend, but they are not growth stocks necessarily because those stocks that are stable and pay dividend tend to grow slower and they might pay more dividend. So growth stocks naturally will pay lower dividends and they might grow fast. So you will make more your money swing trading them, buying them low and selling them high, rather than um, in the form of dividend. But while they are in your portfolio, they could pay you dividend. And this is an example of 2025 swing trading. And you can see that some of them didn't pay dividend, while some of them did. So just keep in mind, because again it can depend on the strategy you are using. We are using long option and swing trading strategy, and we create a watch list of stocks that are growth stocks, large cap growth stocks. And those stocks, they are stable but they have growth to them, and some of them don't pay dividend and some of them do, but usually they pay low dividend because they are still growing. They are putting more, they are reversing more of their money and continue growing. While high paying dividend stocks tend to be level or sometimes downward or grow slower. So when you are swing trading, it's okay if the stocks pay dividend. You just make some money out of them while you are holding on to them for months, in our case, to sell them. So having some shares of them, and while you are holding on to it, you have not sold them yet, you might still earning some dividend. So it is okay to swing trade dividend stocks. Just don't be making a list of high paying dividend stocks to swing trade if you are using upward trend line swing trading strategy. You want to focus on stocks that has growth to them, that are upward, whether they are paying dividend or not or little is okay. Today we are going to analyze CLX using maximum daily chart to see if it's the time to buy. Okay, so CLS pays dividend. So every quarter it paid about $1.24 per share, and it's trading at $113 per share right now. So it's a buy. Yes, it is a buy. Why is that? Well, based on our long option launching trading strategy, we determine this still line to be the valley line that we like to buy at. Using the chart as a mountain, we have the peak, we have the valley. So when you reach the peak, all-time highest peak of the cycle, it will pull back down to the valley to start a new cycle again. The way I explain it, a cycle starts at the valley, reach the peak, and comes back down to the valley again. It will be the whole cycle. So when we are looking at it, is where is it coming from? the price is here. Where is it coming from? It's coming from the valley. It reached the valley and is coming up from there. So therefore, yes, it is a buy. It left the valley, but it's still around that range. It's closer to the valley than it is to all-time highest peak. And right now, I'm not seeing all-time highest peak on this daily chart. So therefore, we because I zoom. No, I didn't zoom. Let's go to maximum monthly chart to see it. So, and is in 2020. So, and it pulled back down and it started going up from there. You see, it's close to the valley than it is to the top of the mountain. So it's still time to buy. Keep in mind that it could pull back and go back down to the valley before going back up again. It might linger there for a while, but again, we are not timing it precisely. You can see that it pulled back, went up, pulled back before going up. It could pull back again. It could stay here for a while. We have a narrow there, so that means we bought it. When it pulled back down to that support line and it went up, we might be positive in a little bit, and then the pullback will be negative in it, and it's going up, we'll be positive in it. So it's going to do that for a while before going up because it has a long journey ahead. It's going to stay at the valley line for a while. That is a possibility. One thing is to keep in mind though, and that's something that I usually just um, remove stocks out of my watch list before because of that. All-time highest price is far in the past, in my opinion, pretty much 6 years ago or 5.5 years ago. We have the date on the x-axis from the past to the present, and the price on the y-axis from $0 up. So we have 2020 dotted line here. Mid 2020, it reached all-time highest price, and it took about 5 years and a half to come back down. That is quite a bit of years to come back down. It went higher up quite a bit as well. So when we look at the last time it left this valley line, it was in 2000, probably in 2009, and reached all-time highest price um, probably in 2010 or so, but pretty much for 2 years it was there, and then it pulled back again to the valley line, and from there it has been on this journey since 2012. It has been on this journey up since 2012 to 2020. So that is 8 years growth there, climbing this mountain top. So 8 years pulling back to this support line to rest and continue going higher up. So having 8 years growth, it took about 5 years and a half to come back down to the valley. So we bought it there, and this just tell me that this is a stock that grow slowly because this all-time highest price is far in the past. In my opinion, I like to have it in the previous year. We are in 2026, like 2024, 2025. If I have all-time highest price there, I'm fine with it. Those show me that there is a growth in it. It's going up very quickly and coming down, and I like the drop down to be about a year or less. So go up 2 years, 1 year, 2 years to reach all-time highest price, and 1 year or less to reach the valley line. That is what I like to see in those stocks that I can call they have good growth in them. Stocks like this, I like to say, is a slow growth. Therefore, it's more of an investment, and technically, I should have moved it from this area to this area instead, where I have those slow growing stocks. So I could still make that switch. In fact, I have CL here. I could well pull CLX there as well. But yeah, so this will be more like an investment, because you can see yourself hold on to it for at least 5 years if it's showing this growth, or minimum 2 years if it reach all-time highest price in 2 years. But again, it's going to reach all-time highest price, meaning surpassing this, and you can decide if you want to keep holding on to it. When it left this valley line and it reached all-time highest price, not to about a year or less, but then continue for 7 years, and continue going up. So therefore, it's a slow growing type of stocks that you can see yourself holding on to for at least 5 years. I like to call those short-term investment, but in reality, it's an investment because it's more than a year. So it is at that valley line, therefore it is a buy time. And it can have this amount of growth before it will come back down. From 2012 to 2026, you can see how many years between it if it's going to replicate this growth again. But other than that, in the past, it has now have this amount of distance between the cycle. Like this cycle here, for instance, originated in 2095 and ended in 2001. So how many years is that? And then from 2001, and this one ended in 2009, like May 2008. But 2001 to May 2008. So you can just see, in general, it tends to have quite a bit of it will grow for a while and pull back, take some time to pull back as well. So it can take time before you will find it again this low. So while it's around this area, we bought some, but keep in mind that it can be around that area for a while before it will start growing again. Buying one share and just leave it in the portfolio to hands-on experience it is not a bad thing. But yeah, it is a buy now. And today is January 26, 2026. So, and it does pay a dividend. Holding on to it for 8 years, well, you'll be making about $1.26, $1.24 or so per share, while it's appreciating in value for you when you end up selling it. If we go back again, at this valley line, currently it's like 113 a share. Let's just say 114. All-time highest price is 239. It's going to surpass that price before we will sell it. So 200, let's just say 240, but that is going to surpass 240 before we sell it. Or we might even hold on to it even longer if it surpassed this in less than 5 years, for instance, and we know that it could continue going up, we could hold on to it. But let's take this minus 113. You have 127 profits that you'll make out of it, after 8 years or so, just using as an assumption here. and that is more than double how much you pay for it. So yeah, you'll have 100% your profits. The profit will be 100% and more. Am I saying it right? Because if you pay 113 and you make 127 out of it, in addition to your 113, you double your money there. So that is something to consider as well. So don't discard those stocks that takes too long for you to sell them. Again, it's going to continue going up. So if you buy it this low, it's going to continue going up. So if you are accumulating that profit in it, it's no point of selling it to lock it in if you know that there is a chance it could continue going up. So that's why I like to target those all-time highest price for those growth stocks to be my exit, my default exit point. And from there, I can decide if I wanted to sell it once it surpassed the previous peak, or if I want to continue hold on to it, depending on what that stocks did in the past. But for this type of stocks that is slow growing, slow moving, it can take years before you find it again around the valley line once it start going up. But it will, have a lot of upside, up and down in it, because it's going to be growing slowly, having short support line to rely on and moving and so forth. So thank you so much for watching. We thank you very much for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, Cross of Liberman Consulting L.L.C YouTube channel, and in sub.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. The way we analyze CLX is the way we do our chart analysis using long option and swing trading strategy. If you like that strategy and you like to practice swing chart analysis and receive feedback, will you please check the link in the description of this video, or visit our online store Liberman.com for our small group online workshop and reserve a spot. For more videos in this series, will you please check the playlist in the description of this video, how to start swing trading step by step using long option line. And we do have other swing trading related videos playlist in the description of this video as well. Thank you so much for your time. Happy swing trading.